What would a Kamala Harris tax policy look like? We know that Kamala Harris was thrust into the presidential race when Biden resigned from the race earlier this week. We know very little about her view on taxes, and this is very important for us. We have to consult and advise our clients on the best way to plan for these taxes, the best way to work with the IRS. Will she be more aggressive than President Biden? Will she be stepping away from his pledge to not increase taxes on people making under $400,000 a year? This is families making under $400,000. Individuals making under 200,000. Will she keep the pledge not to increase audits on that same group? How will she approach the Trump and Biden tariffs that have been levied on China and some of our other trading partners that have been really pulling in a lot of money for the government? In the past, when her 2020 campaign for the presidency for the Democratic nomination was going on, and she was a senator from California, she really proposed multiple changes to tax code. She wanted to raise the top tax rate. She wanted to 39.6%. She wanted to implement a 4% income-based premium on households making more than $100,000 annually to fund her version of what was referred to as Medicare for All. She wanted to create also a $3,000 refundable tax credit, or $6,000 for married filing jointly, for low and middle income taxpayers. It was the LIFT Act. We don't really know that many details about that one. She wanted to increase the capital gains tax rate. She wanted to raise the corporate tax rate, which is now at 21%. She wanted to raise it up to 35%. Biden was wanting to raise it up to 28%. She wants to take it up to 35%. She wanted to expand the estate tax. She also wanted to impose a financial transaction tax on stock trades and also bond trades and even derivatives like options and futures contracts. She was also the 2020 primary campaign. She was proposing a $2,000 per person month for pandemic relief, and that would have been about a $21 trillion package, and that would have been done through the IRS. And she was also for creating a tax credit for rent payments for renters earning less than $100,000 a year, but spending more than 30% of their income on rent and utilities. No, this is from her 2020 campaign. So things definitely could have changed since then, but we do know that she is a lot more aggressive than even Biden on this. Time will tell. I will tell you the biggest risk that taxpayers, especially business owners and business people, have on this is really, if she does get elected, the Trump Tax Cut and Jobs Act it expiring. It really expires at the end of 2025. And there's cuts on there, tax cuts that fall off. That's really the biggest risk of this all. So probably the scariest thing is because she doesn't really have to do anything for that to expire. All these other proposals really would have to get passed through Congress and be signed by the president. And there's a lot of changes that would take place during that process. But the biggest thing that we're worried about as tax advisors, as for our clients, is the Tax Cut and Jobs Act, what was passed in 2017, that expiring. That's going to hit everybody if Trump's not elected, and if this doesn't get passed, an extension on that doesn't get passed, then that will affect everybody more than really a lot of these proposals would. My name is Randy Martin with IRSprob.com. We help good people with IRS problems. You can look us up online at IRSprob.com. Or give us a call at 214-214-3000.